It is time for a mortgage market update. Yes, yet another one. So it's May, yay. And we're still in the middle of the COVID-19 pandemic. I know, guys, yeah. So that's happening, but a lot of people are concerned, like what's happening with lending, because there's a lot of mixed articles going out. There's some articles, like I was reading one the other day that's like, it's impossible to get a loan. And I was like, really? Because we sure have a lot of them going on. It's not impossible at all. But the media is always going to go with whatever's going to make you click, right? And you're going to click if it says you can't get a mortgage, it's impossible, because it's like, oh my goodness, this is getting worse. And the bottom line is right now, lending has changed a bit, but it is not impossible to get a mortgage. Let me tell you what is more difficult now. Okay, and let's start with what's easy. Okay, let's talk about easy loans to do. So if you're doing a conventional mortgage, and what you can do if you're like, what is she talking about? Google Fannie Mae loan limit in your county. That will tell you what the conventional mortgage limit is in your county. So in a lot of places across the country, it's 510, but there are some high cost areas, quite a few in California and Washington, where the amount's higher, Hawaii too. So you want to Google Fannie Mae conforming loan limit. So if your loan amount is in that ballpark, it's pretty easy, guys. It's not hard. Your credit score needs to be over 620. Your debt to income should be under 50%. Really, it should be under 45 to be totally clean. But I'm not seeing a lot of changes in that arena at all, which is great because rates are amazing. And it's like they came down again. Like, what is that? Rates are great. So it's a good time to refinance. It's a great time to purchase. Now, the areas where we are seeing a little bit of difficulty is jumbo. So a jumbo loan is going to be over that conforming loan amount. Okay. And 4 months ago, we'll say 4 months ago, we would have a 5% down jumbo mortgage or a 10% down. Those are evaporating. And it used to be like with a jumbo mortgage, maybe you only needed a couple months reserves. Now you need 6 to 12, and in certain cases, 24. And reserves are extra money in your bank to cover the principal, interest, taxes, and insurance when the mortgage closes. So we are seeing jumbo lending get more restrictive. However, jumbo loans are still available, guys. It's just 5% down on a jumbo, not going to happen. You know, it was never a brilliant idea at the time. Like some cases it was, but overall, it's not there. So if you had your heart set on buying $1 million with 5% down, I don't think it exists anymore. That's where we see some hurt. So something to keep in mind. The other thing is people are like, well, wait, why haven't jumbo rates come down? Well, because they're not conventional. So Fannie Mae and Freddie Mac, they're conventional, okay? And those rates respond to what's happening in the market. Jumbo rates are a whole other different animal. And that market isn't coming down because of liquidity risk, because of what's happening. So jumbo market, you know, if you've got 20% down, great credit, money in the bank, you'll be fine. You'll be fine. It's just if you're stretching and barely there, now's not the time. Wait till this is over and then see when the guidelines come back, because that's what we're being told. We're being told, hey, this is temporary. We expect that once this is over and we kind of see where the chips lay, we'll know, you know, what's going to happen. So jumbo's definitely affected. And then other programs that were outliers, call them outliers, outliers, I don't know. Creative financing evaporated a couple months ago overnight. And it was because of liquidity concerns, unemployment, the stock market, all of it. All of those things, like creative financing occurs when the economy is humming along and it feels low risk. That's when investors go, you know what? You're self-employed. I don't need tax returns. I'll go off your bank statements. It is when the economy is humming, safe, and secure that you see the more creative options. We're not there right now. No. So those have disappeared. But then it's like you go, okay, well, where else is there positivity? Because let's talk about some positivity. So we already have conforming mortgages, no changes. Rates are amazing in that ballpark. And then VA and FHA. There's no problems. We're still doing VA loans. We're still doing FHA loans. We're not restricting them. They are definitely available. So it's like, come and get your VA, come and get your FHA. Rates are great. Let's do it. The only restriction in those two is that we are seeing some lenders tighten up on credit a little bit. So you may have one lender that won't do a credit score under 680, but there's a lot of lenders that will do credit scores 620 and up. So it's really just an issue of talking to the lender and seeing what they can do. And if they can't offer something that suits you, call a couple more. That's it. And it's like that normally too. And then I do have to say with the government loans, definitely shop your rate, especially VA, shop that rate. So the other thing that we're seeing in lending with COVID is we are seeing additional, I would call it like an additional check-in, right? So we didn't used to get pay stubs right before closing, but we are doing that now. And the reason we're doing that is just because people's employment is changing so rapidly, and our loan applications from start to finish have to reflect reality. And if at the start, everything was good, and then by the end, everything's changed, we have to adjust. We have to be able to show your ability to repay. And if the situation's gone downward and we can't show that anymore, well, we're stuck. So it's very important that if your job is affected by COVID during the mortgage process, you reach out to your lender, because all lenders are going to find out by the end. And it's better just to be upfront and honest as soon as it happens, because we will all do everything we can to still make it work. Like, I've had so many clients lose their jobs in the middle of transactions, and it is heartbreaking. But we're going to try to look at those numbers and squeeze it and see everything we can do to help. But the bottom line is you want to be upfront and transparent so that we're not having to wait to get that pay stub at the end to go, oh wait, what happened? Okay. So I hope this has been super helpful. If you have questions, comments, as always, reach out. I'm licensed in a ton of states and really would like to help you. I like to help everyone. Thanks.